So here we are again talking about financial fallout, looking at scary charts of government bond yields. But what's going on beneath the surface? We're going to, over the course of the next few minutes, kind of try and dig a little bit deeper, not just looking at the political fallout of what we're seeing right now in Downing Street. But of course, we have to start with that because a lot of this is the politics. This is showing you the UK government bond yield. It's the 10-year bond yield. It's the one that most people look at. And it's a pretty good assessment of what investors want to charge the UK to lend to it, OK? And it was up around 5% last week, kind of dropped down a bit. That was largely because of oil prices falling for the most part. Then you had the local election results, and it started to kind of gradually go up a little bit. But the thing that's really triggered it, kind of got it, spiked it up higher, is all this leadership speculation about Keir Starmer. We'll come back to why that matters in just a moment. But of course, the Prime Minister came out and said, look, I'm staying. And you can see the line stopped kind of going up. It kind of settled somewhat. But it settled at a pretty high rate. So you're talking about 5.1%. And if we look back, not just the past few days, but the past kind of decade and a bit, so going all the way back actually to 2008, we'll look at where we are right now. And just for context, OK, 2022, mini budget, we talk about that quite a lot as being this scary moment for government bond yields. And it was really scary. I kind of went through it myself. But right now, we are higher in terms of our government borrowing rates, the interest rate charged to the government, than we were in 2022. In fact, we're the highest since 2008, despite the fact that interest rates are coming down at the same time. And we are to some extent a bit of an outlier. So this is showing you other countries around the G7, so other major economies, and just how much their bond yields have risen in the past 24 hours. There's the US, up quite a lot because you had higher inflation numbers in the US. But look, the UK has had the biggest increase of all of the major economies. So that's government bond yields, us compared with the rest of the world, just the past 24 hours. And if you're in the Treasury looking at that, you're like, OK, that's a bit of a worry. Second thing to be worried about is if that's happening at the same time as the pound falling, that's kind of the emergency signal that a lot of people get worried about. What's happened in the past 24 hours to the pound? Well, this is showing you major currencies and how much they've fallen. And the pound has fallen sharply as well. So put those two things together, and that's definitely it's a warning sign. It is just the past 24 hours, though, so it's not, crisis level, but definitely it's a sign that people are concerned about Britain. And, I think part of the reason that they're concerned about Britain is not just about the politics, and like I say, we'll come back to that in a second, but it's also about this chart here, which I think is one of the most important economic charts out there. And it just shows you the total amount of gross domestic product per capita in the UK going back to 2000, OK? And what is this? It's just a measure of how well off we all are as a nation. And up until the financial crisis, it was kind of heading in that direction. And you might have presumed that it would carry on going up like that. And what does that mean? It means we're getting richer and richer and richer, better off. But instead, that didn't happen, as we all know. We had the recession. But not just the recession. What was perhaps even more kind of disturbing was that the line never quite got back to where it was going before. So we are not as rich, or at least at the time of COVID, we were not as rich as we thought we were going to be. Then COVID happens, and, again, you might have thought the line would carry on growing like that. But look what actually happened. That big fall, of course, lockdowns, and that's where we are now. So that is how well off we are, GDP per capita, right now. And we're not as well off as we might have been if that pre-COVID path actually happened. And significantly, we're about 24% poorer than we would have been had the line carried on going up like that. And I think psychologically, this is incredibly important. We thought we were getting better off like that. In fact, we're only there. And that kind of level of disappointment across the economy, I think that's part of what explains a lot of the dissatisfaction that we have in this country. Worth saying, we're not alone on that, OK? So we're not like a total ugly duckling. If we zoom into this area here, and just look at other countries around the G7. So this is showing you other countries, and there you've got the US, and it's a bit messy, I know, but basically just trying to show you the same chart, GDP per capita. There's the US, there's Italy, there's France, Japan, Germany, and so on. Have a look at where the UK is here. Okay, so the red line is the UK. It's a similar path, isn't it? And it's clear the US has done so much better. Italy, actually, although it's kind of bouncing back from a terrible few decades before, has done somewhat better. But we're kind of in the same basket as your France's, your Japan, Canada, and Germany. So it's not like we're alone. But here's the issue. So you've got kind of weak growth, but not unusually weak growth for Europe. But here's the issue. On top of that, you've also got something else in the UK, and that is the fact that when investors are looking at us, they're also looking at the fact that we are particularly sensitive to inflation. And this is showing you inflation just in the last few years across the G7, the average rate across the G7, that kind of range there. Inflation, of course, just the rate at which prices are increasing each year. And look at where the UK is. So we used, back in kind of 2018, kind of at this period here, we used to be kind of around the average, maybe kind of the upper end. But in the last few years, that red line has been above where everyone else has been. In other words, we have been an outlier when it comes to inflation. And that's a worry because we're about to face this second energy price shock with higher prices obviously coming from what's going on in the Persian Gulf. And we're starting from a kind of, a slightly worrying place. And we are kind of sensitive to imported energy. So this is just showing you the extent to which different countries around the G7 rely on imported energy. And if we just focus here, in particular on the UK, because you can kind of ignore the US and Canada because they export a lot of energy as well as importing it. But look at us, UK, Italy, we're really dependent on energy imports, and that is the thing that is going to matter in the future when it comes to inflation. Same thing too, by the way, at diesel. So this is just showing you who are the world's biggest diesel importers, and who's there near the top, actually higher than anyone else in the G7. It's the UK. So we're exposed to that. We've got higher inflation already. We're exposed to higher inflation in the coming years. And on top of that monetary issue, which means the Bank of England may have to raise interest rates higher, you also have a public finances issue. And this is kind of edging towards the politics here. Public spending in the UK is high. It's been grinding higher in recent years. You can see the pandemic there, but it's been grinding higher in recent years. And that obviously has been a policy of Rachel Reeves. But worth just kind of drawing a line back here and asking the question, what are the occasions where public spending has been as high as it is today? And the short answer, I'll just kind of highlight them. The short answer, you've got COVID in 2020, you've got the financial crisis in 2008, 1970s, you've got the oil price shock. Basically, the only time previously where you had public spending this high is when you had serious economic crises, where people needed to kind of go in and splurge more. Well, where are we now? We're not yet one, hopefully there won't be one, but we're not in a recession right now. And so you shouldn't necessarily, based on history, you wouldn't normally see public spending as high as it is right now. So public spending is high. Taxes as well, they are high. In fact, they're heading up to the highest level that we've ever seen, the tax burden. So public spending is high. Taxes are high, and there's a question mark over how much more you can actually kind of squeeze out of people when it comes to taxes. And then debt interest. So back to that chart at the start, that 5% chart. Debt interest is also close to historic highs. So put it all together, these challenges, the economy not growing fast enough, you've got the monetary problem as well, and then you've got this fiscal challenge. And a lot of people would say, OK, you've got challenges, you need a strong government to deal with it. And that, it kind of looked like that's what the UK had. So it had this stonking majority, 2024, that's what Keir Starmer came in, massive majority, their landslide. And at that point, a lot of people were thinking, OK, we've got all these problems, you could at least deal with it, or you're in a better place politically to be able to deal with it than any previous government. But of course now, and this is the crisis we're kind of living through right now, now people are realising that doesn't seem to be happening. And you've got the government totally beleaguered at the moment, and you've just had local elections that tell a very different story about the UK. No longer do you have that potential landslide. If the results of that local election are to be believed, you might be looking at this. So Reform, potentially the biggest party in the next parliament, but still short of a majority. And so the ability, whether it's Reform or whether it's a coalition or something else, but nonetheless, the ability that the UK has in the future of dealing with all these deep-seated economic issues, that's an enormous question mark. And put all of this together, and that's why, people are not just looking at, Keir Starmer's fate, they're looking at the broader picture for the UK, and they're quite worried about it.